Good evening, guys. Hello, everyone. I see people, they start joining us now. How is everyone doing tonight? Come on, say whatever you want to say. How are you guys? Is everyone doing all right? Feel free to use the chat and to write your comments, your observations, everything you want to ask me. Marcus said 7. I assume you are doing all right. So where are you guys joining us from? Tell me, where are you guys joining us? Give me some countries until everyone join. From Netherlands, as usual, Gerard, thank you very much. Louis from France, welcome. Antoine from Bulgaria, fantastic. Manuel, UK, great. Who else? Anybody from Spain, from Greece, from Cyprus, perhaps? So, from Poland, maybe? All right, guys, from Switzerland, Stefan. Great. Also, guys, we are live on the YouTube channel as well. We have some people on the YouTube channel watching us. Welcome to this weekly market watch, insights and predictions here at Elevating, brought to you by Elevating Forex. And I think we are good to start. So we want to ensure that everyone understands that this content is for general information only and is not intended to provide trading or investment advice or personal recommendation. As for those who see me for first time, my name is Theo Theodorou. Yes, it's a very Greek Cypriot combination. So that's how you can find me on by social media, for example, with Theo Theodorou. As per my expertise and experience, I'm in the field, in the industry for the last 11 years now. I hold a couple of certifications as a market analyst, as a market technician by the Society of Technical Analysis from the UK. I specialize in currency trading. I love when it comes to currency correlation, especially last week with what's going on with the market. As per the interest rates by 5 major banks announcements, and in Switzerland, as we observe, they drop the rates, but we're going to see them on the chart. On a daily basis, I create educational courses for investing, for training. I publish articles in financial magazines, and I host webinars for. I host webinars with traders like Steve Ninson. Perhaps you know him, the guy who introduces to the candlestick. With John Bollinger, the gentleman who created the Bollinger Bands. Daniel Lacalle from Spain. Brilliant economist, and that's for we can see it later on if you want any specialized help with your trading, about coaching. We will see that later, but that's all for now. So we are ready to start with the charts, guys. If you need any currency pair that is beyond the usual we analyze here at Elevating Forex, please make sure you write it on the comments as early as possible, please. Not at the time we are about to leave the webinar and you tell me, Theo, can you please analyze ABC? So, guys, let's start with the Euro US dollar. I want to encourage you to engage with this webinar. Please, any questions, observations, anything that may or does not make sense, please ask me, and I'm happy to repeat that again. So last week, the euro US dollar closed under all the weekly moving averages. And on the daily chart, the picture looks like this. Here is, first we need a drawing tool. So the price on the daily chart made this higher high and higher low. Afterwards, it moved back to this area of support. We expected the price to bounce off and move upwards, and it did. And on Thursday, the sellers, they took control, bearish engulfing, and that signaled the potential end of this uptrend. Why? Because if the price retraced, as it did, 100% of its upward move, and it retraced all this upward move, it means that the buyers are not as strong as they should be to keep pushing and keep lifting the price higher, so the uptrend to continue and to maintain the uptrend. So from Monday onwards, here it's a critical point. Guys, the price here has a solid support. It's around 1.08. The reason I don't put lines on the daily chart or on the weekly chart is because I have the analysis on the 4-hour time frame. You can copy everything. You can take screenshots of this one here. So on the 4-hour time frame, starting Monday, there is the weekly low here at support. If the price will bounce upwards, there is a gap, a price unmitigated gap at this point here. We might gonna see the price tap into this area. There is also a 4-hour bearish engulfing candle that left behind this order block, that it can be filled and force the price to decline. Okay, so keep that on your chart. It's maybe it's gonna be a good trading pair. The 4-hour time frame already created lower high and lower low. Some people, they prefer to see from this point to that point a retracement, Fibonacci retracement of about 50% or 61.8 or 70, 80%, whatever it's a percentage you're looking for. Usually on the daily and 4-hour time frame, we go about 61.8%. That's the golden Fibonacci ratio. And we can pick up trades from there. Also, there is this 50-period moving average, the 200-period moving average. They will add significant resistance in the market, especially if they're going to cluster around this resistance, which is hosting this bearish engulfing order block. Is that clear? Do you guys understand this? That's how we're going to look to position trades on the 4-hour, or if you want to drill down to the hourly time frame and pick up some price action perhaps, or to use narrow stop loss placement. Okay, next one, pound US dollar, the sterling weekly time frame. This one as well, the price closed below the 10-period moving average on the weekly chart. Some people wondering, so what? Yeah, the price now sits at a strong area of support. So we need to be a bit cautious with this one here, guys. On the daily chart, yes, we have this kind of selling climax that is more obvious on the lower time frames, but please understand that the price is around these areas of support. Regardless if we are trading personal money, prop first money, and whatever, whosever money we are trading using bots or anything, we are still retail traders in terms of the capacity we have to move the markets and create moves in the markets. Okay, so regardless the title, our currency capacity is limited and we can't move the markets with our funds. So what do we do when the price sits at a strong or at the robust support? We just need to wait for the market to either break below the support or bounces off and move upward away from the support. Okay, guys, any questions so far? So on this 4-hour time frame, if you are watching it from the mobile phone, I don't know how it's going to look like because I zoom out a little bit to show you these levels here where I point on the left. So if the price will bounce off and move upwards here, then this 4-hour gap, it's gonna likely fill. And here is the challenge. When the market has an order block, and it's something that I teach traders all day long. We see this happening all the time. When the market has an order block between two unmitigated or gap areas, there is a kind of dilemma by trader if we're going to place limit orders right at this order block area. And why it's a dilemma? Because using the Fibonacci, for example, to find the expected retracement, the 61.8% sits above this order block. So maybe the price will penetrate this, fill up this gap here, and then decline and move to the downside. So when we see this order block between two gaps, unmitigated areas, I prefer either to wait and see the price action into this 4-hour order block, how it's going to behave. A reversal price action, it might going to work to take the trade short, or if the price will decisively penetrate with a long bullish Marubozu candle. For those who don't know what is long bullish Marubozu candle, it's a candle like this. It's a candle like this. And a bearish Marubozu candle, it's the opposite. It's a black candle like this. It's a candle that has a long body compared to the bodies of the nearby candles. And we can wait to see if the market penetrates, enters this area, and find resistance to go short. Okay, and that's a kind of dilemma. Also, for those who uses the MACD, as the price made lower highs and lower lows from this low to this low here, the MACD signal line, it's above, or easier to say it is the MACD blue line, which is the MACD line, that's how it calls. It's below the signal line, the orange one, and that's a bearish indication. So mainly on the majors, we are looking for overall bearishness this week based on the today's current market structure we see in front of us. Maybe on Thursday, something will change. On Thursday, there will be significant news events in the markets, okay? And things might gonna change. Next one, USD, Japanese yen, guys. Sorry, I saw some comments here. Antoine asked, what do you think of the NASDAQ and the US 30? We will do the analysis. Jerome said or asked, is it worthwhile to start trading via prop firm, as I'm also in a group that they'll challenge of me? Jerome, because this is not as per the subject of the webinar, I'm happy to answer this question in a bit more detail, a bit more personalized. Okay, so if you kindly send us a message at support and just point to speak with Theo, I will contact you and for sure answer that question because it's a good question. But sorry, it doesn't involve into this webinar's subject. I hope you understand. So USD JPY, guys, on the weekly chart, the price made equal tops. Okay, it's a kind of double top. It's a kind of double top formation. Now, as I always pointed out, not only during this webinar, but also during the analysis I sent to hedge funds, to prop firms, during the private coaching I have with traders on a pretty much daily basis. When you see equal tops to confirm the double top, traders, guys, you must wait for the price to trade below the neckline that created this equal top. Otherwise, it's not a double top and it's going to be an ascending triangle. Okay, I'm telling you this stuff because it's my job to know this stuff. Okay, and I transfer you the knowledge. Going down to the 4-hour time frame, we see that the price on Friday created this equal top. Many traders, they will enter short here for the anticipation of a double top. Guys, it's not a double top. A double top, it's a price formation when the price moves upward, then decline as expected, then moves upward, and it's unable to create a move higher. And it stops somewhere at the previous high area. Then it moves downward and penetrates the swing low. Then you're talking about a double top formation, and the implications is to see the price traveling from the breaking point to the downside, at least the distance between this point here, you measure it in pips, and this point up there. So we measure it in pips and we estimated the minimum distance, okay? Because the price might gonna behave like this. Price, it's in an uptrend, it's gonna go like that, it's gonna go like this, and it's gonna break to the upside, okay? This is an ascending triangle. It's one of the most powerful trading setups when founded in an uptrend. So let's learn trading from the source and how the trading it must be. Equal tops for now. There is a bearish engulfing order block created at this top. Yes, it might gonna kick and activate some selling orders. And also at this point here, for short-term trading, there is this bullish engulfing order block, so we can use both into our benefit. Okay, overall, if the price declines, I want to see the price decline and move below this low, and then I will be looking for short positions on this one here. Sometimes the price does not give us the information we need to create a trading idea around it. Okay. Jerome said, yeah, no worries, ask Gilks for your details. Yes, please ask him for the details, Jerome. Roland's, how are you doing? Roland's asks, which 3 confluences you are looking for before entering the trade if using bearish and bullish fair value gap? I'm looking for the trend, the direction of the trend, higher time frame. I'm waiting for the 4-hour time frame to roll over and confirm the daily direction. And if it's an unmitigated fair value gap and I identify an order block into that area, I will straight go for limit orders, straightforward. I don't wait for anything else. Okay. Guys, I left this for the middle of the webinar. Actually, this week, my attention, at least as per today's current market conditions and price action and structure, it's the weakness of the Kiwi. So on the weekly chart, so far, the Kiwi or the New Zealand dollar against the US dollar broke below all the weekly support levels, cleared up all these 1, 2, 3, 4, 5, 6 weekly lows. And there is room for the price to move at least and retest this area of support around 0. Let's say 59 to have it as a round number. So keep that in mind. Again, I lack the crystal ball. I don't want you to misinterpret or misunderstand my words here. It's a high probability trading setup. This one, the New Zealand US dollar, moving down on the 4-hour time frame. And Roland, this is an example of the fair value gap. For example, from this point to that point here, it's a fair value gap, and for everyone, of course. And also there is another one up here. The price made what we call a fresh move to the downside, lower highs, lower lows. So at some point, it will create a bullish sentiment. It's going to move upward. We enter into this area of resistance, and maybe we're going to see decline and move to the downside. Okay. If you are using Fibonacci retracements, you can use from, for example, this high to the first reversal swing low. We don't have a reversal yet, but if we see the reversal, we're going to take it from the reversal and we will find out the estimated area of 61.8% where the price might gonna stop and then continue to the downside. If in that area consists of some levels of confluence like the maybe moving averages or horizontal resistance and order block, definitely we're gonna go for a sell limit order because we trade primarily the daily chart using the 4-hour price range. Is that clear? Luis asks, is my Giles the robot trading man? Giles, it's at I was about to say customer support. It's at support, and when you text us on Elevating Forex Telegram channel, you will speak with Giles. And if you need to talk with me because I don't have access to the messages at support because I'm not answering messages there, please ask to connect you with me on the Telegram, and they will pass me your details, and we will speak directly. That's not a problem. Okay, it's just how the way we work it here with at Elevating Forex. So I think it's very simple for you. Just text Giles at support. Hey, please connect me with Theo. I will write you here my name in case you just join. It's Theo Theodoru. Or you can, guys, maybe you can find me on Telegram. Feel free to use also the Telegram, and you can find me with Theo Theodoru. It's my personal there. So let's continue with the next one. Euro New Zealand as well. The price on the weekly chart printed this bullish candle. It has room to move until the next weekly high areas. So the price push higher It can do it in different ways. It can move upwards, downwards, and continue to the upside. And there is an important thing I would like you guys to understand. The price does not move in a straight line just like this. Okay, to move from this point here, point A, to this resistance at point B, it won't go just on a straight line. It will go in this cyclical formation, zigzag formation, and please accept that's how the market operates. So on the 4-hour time frame, there is a bullish engulfing order block at this point here that the price created. Also, this was the origin that the price created a new higher high. Everything looks bullish here, everything seems bullish, and if the price comes back to this area of support here in this order block, that's a bullish engulfing order block, we might gonna see continuation to the upside and the price bounce off and move to the upside. Okay, so keep that in mind as well. Generally speaking, weakness on the New Zealand dollar will show you some bullish trends on the currency pair that involve the New Zealand. So we short the New Zealand and we go long on the other one. Let's check the gold. I know many traders, they are interested in gold trading. So the weekly chart last week, actually, so 2 weeks ago, or during the last webinar, easier to address it, we saw the price remain as an inside candle, bearish inside candle, preceded by this bullish upward move. So we expected retracement. What actually happened is once the Fed reported the interest rates and they kept them at the current rate at 5.5%, the market impulsively printed this upward move on the lower time frames, and by the end of the week, false break out the all-time high around 2200, let's say, and it created this this candle formation. One second. It created this candle formation here with the long upper wick rejecting the all-time high. So from this week onward, we expected to see some sort of decline because the buyers here, these bullish candles, they got taken out by the sellers. However, remember, the price didn't created a lower low yet. So it might gonna find support, it might gonna bounce off and move upward, and it's gonna enter into this area of range, resistance, support. All right, because there are many scenarios that we don't know how the market will move, we wait for price patterns we do understand, and we have an edge over the market. That's all what we do, guys. We wait for a pattern we understand to be visible and readable on the charts. If the price breaks below this low here, as well as this support S1 around 2150, because it's very close by, then we will talk about a downtrend on the 4-hour, and we definitely gonna look for maybe some fair value gaps, maybe some bearish engulfing order blocks to place our limit orders and get filled on the decline to move lower. Okay, here are the support. Please add them on your charts. Again, If you ask me why, Theo, you took this one and you didn't take this one, why you took this one and you didn't take this one, just in a nutshell, it's my job to know which supports are the most relevant for the week ahead for swing trading or price action or 4-hour time frames. Okay. If you want some more specialized knowledge, please contact me and I will help you with everything you need. US oil weekly chart. The price created this gravestone. What a word, gravestone. Yeah, it's a candlestick pattern, candle line terminology, and the price, it rejected the higher prices with a body very small compared to its tail. So after this bullish engulfing, the market, instead of maintaining the higher prices, it rejected around the monthly resistance. Here the price finds the monthly resistance if you look at the monthly chart and get rejected. So from Monday onwards, we do expect the sellers to take control. Again, anything can happen, but the edge is this one. So for those who know, or they maybe don't know what is written on the chart, this is one of the most prominent reversal patterns. When it founds in an uptrend, it calls head and shoulder reversal pattern. And the price, after expected to continue moving upward, it retraced pretty much 90% of its move, and then it created a new low. So we have this neckline. Now, the minimum expectation of the price of the target is the $78. Write it on your chart. There is a lot of potential if the price will trade below this this weekly low. It might gonna come. There is also a fair value gap or gap area here around 78, and it's a promising trading opportunity. Okay, as every pattern, same with this one, there is also the possibility of the failure of each pattern. So if the price will drift around and move to the upside, this pattern is invalid. We delete it from the chart. We don't look at it again. And that's simple as it is. Next one. Any questions, guys, so far? Any questions so far? S&P 500, or better to start, you asked me, with the Nasdaq and the Dow Jones. Well, with the Nasdaq, last week also the market created, guess what, all-time highs. And on the 4-hour time frame, it created this higher high. This high is higher than this highs here, and it left behind this fair value gap. So let's see if the price will come back and retrace into that one, find support and bounce off. The next area of resistance, it's going to be the 18,600, because the market already made an all-time high. We're going to gradually take round numbers and moving upward as the price moves upward. Jinish asks, which platform are you using? I'm new to the group. I use the Trading View platform. You can either download it or you can access it online. Okay. So with this one here, either we're going to see the price filling up the gap here, but there is a support. There is a bullish engulfing support here, and I will be primarily looking to pick up trades and go long from this one here, guys, instead, or rather than waiting for the trying to pick up where the price is going to enter and if it's going to enter this fair value gap. Okay, because the price is in an uptrend. There is also underneath, there is also this bullish engulfing area that it can host. It can be used as a solid area of support. We're going to pick up the one that we believe it's appropriate, or we find more value on that one. US 30. With the US 30, again, all-time high, and this one it's more clear in my opinion, because the distance from the breakout point to the high prior retracement, it's quite significant, and price now is retracing and enter into this fair value gap or gap, and I will be monitor to pick up some trades from here. If my call it's going to be wrong, I will re-enter down there. So there are these two areas because of the bullish engulfing order block and bullish engulfing order block, and pretty much these are the setups. 99% of my trading, it's around bullish engulfing and bearish engulfing with the market structure. I keep it simple and consistent. Next one, S&P 500. We didn't say the S&P 500. Similar with the Nasdaq, this one. Price consolidated here, explode to the upside. I will definitely waiting for the price to retest this S1 support. And if you ask me where I would like to participate into this one, I will tell you around this swings high point, because they coincide very nicely with this S1 support, as well as the 50-period moving average on the 4-hour chart. Okay. It's obvious that it makes this all-time high. If you want to write the numbers, just take them from my chart. USD Canadian dollar, my goodness, with this USD CAD weekly chart, is been like, it's been ages that the price is trading around this monthly high here, around 1.36, and a bearish engulfing preceded by followed by a bullish inside candle, and last week by a bullish engulfing candle that was unable to break above these high points here. And you might wonder, Theo, you are very detailed here. Why you put so much details? Because in trading, the detail will separate the good traders in the long run. Okay, and why this is important, guys? Imagine like a car that is speeding and started from this point A and is hitting upward, and at this point B it just stopped. There is an obstacle here, the resistance, but the price didn't move fast and rapidly away to penetrate the resistance, and it just stopped like here. It's a kind of a weakness indication in the market. So I'm very suspective at this point. If the price is gonna reject it here, or if it's gonna penetrate, most likely we're gonna see rejection, but we are not sure, because the price wide just came here and stopped, and it didn't continue to the upside to create the breakout like this one here. The price stopped there, not right here, but the next candle decisively, once it interacts with the support, penetrates and then broke to the downside. Okay, so I'm a bit skeptical with this one. I'm just sitting on the sidelines. There were some order block areas last week, like bearish engulfing order block here, that was a solid trade, and the bullish engulfing order block here. To be honest, I didn't get involved with the Canadian dollar. You might wonder. So yeah. New Zealand Canadian dollar, it's in a downtrend. I experienced a losing trade last week. So I was looking to buy some dips around here, but the market had a different opinion, so I'm not into this trade anymore. On the weekly chart, though, I'm waiting for the price to move under this weekly low. That's not the weekly high. So if the price moves under this weekly low, we might gonna see some solid continuation move. If it's gonna bounce off and move to the upside, then I will be waiting for the price to roll over before I continue looking for shorts. Okay, again, US New Zealand dollar weakness. Regarding Bitcoin, it's up 2.86% compared to yesterday's. It's trading within an ascending triangle, guys. With this symmetrical triangle, my mistake. Trades within also the 50 and the 200 period moving average. Possibly it's going to break to the upside. Remember, we had this bullish engulfing order block that we marked on our chart from the last, from a couple of weeks ago, actually, not even from the last webinar, it was already on the chart. And the price bounced off from this order block here and it moved upwards. Let's see what's going to happen next. So fairly bullish on the cryptos. Of course, we are entering into the last stages towards the harvest, the Bitcoin harvest. So pretty much enthusiasts, it's in the market, investors and traders, they are very optimistic, and the markets, they are just explosively moving upwards. Roland asks, I see you are using the SMA, actually it's the EMA, the exponential moving averages I use, but yes, it's the 200 and the 50. It's better to use it with time frames 1 day and 4 hours. Spot on. Yes, Roland, absolutely. That's great. Guys, I don't see any other questions coming in. I think we cover pretty much what we have to cover for this week, the opportunities. So in case you need to contact me for any, either to ask me something about questions that they came about prop firms and all this stuff, perhaps about platforms, TradingView, to help you how to navigate through the TradingView or something, feel free, reach out to George at support and ask for Theo Theodorou, or find me on social media. I'm everywhere in all the social media, on Telegram as well, with the same name, same surname, same person. Okay, however you feel more comfortable with. I would like to wish to everyone, not only myself, but also the whole Elevating Forex team, to have a fantastic, fantastic rest of the night ahead. Enjoy your next week. We're going to be back on charts from tomorrow onwards. And I will see you all again next Sunday at the same time. Happy trading, guys, and take care. Bye, everyone.